On Tuesday, President Joe Biden of the United States of America announced that he was placing an immediate ban on Russian oil and other energy imports in retaliation for the invasion and continued attack of Ukraine. The United Kingdom will also be taking a similar approach, though choosing instead to gradually phase out the importation of oil from Russia. The ban is the latest in a barrage of financial and economic sanctions meant to push back on Russian oligarchs and government officials. However, since Russia is such a big exporter of crude oil, the ban may push up oil prices, which means Americans will have to pay even more for gas. The president mentioned this while addressing reporters at the White House on Tuesday, but explained that it is a small price to pay to deal another powerful blow to Putin's war machine. Russian oil will no longer be acceptable at U.S. ports, and the American people will deal another powerful blow to Putin's war machine, Biden said on Tuesday. Currently, Russia is the third largest oil-producing country in the world, averaging about 11.3 million barrels per day. It is also the largest exporter of oil per day, exporting around 7 million barrels every day through pipelines and tankers. According to the American fuel and petrochemical manufacturers, the United States imported approximately 209,000 barrels per day of crude oil and 500,000 barrels per day for other petroleum products from Russia in 2021. Combined, that amounts to less than 10% of crude oil and other petroleum products imported by the U.S. in 2021. With such low figures, the U.S. may be able to afford the ban. The story is different for other countries that are largely dependent on Russia for oil. Last year, Russia supplied a quarter of oil imported by the European Union, with Germany and Poland taking the largest quantities for domestic use. Slovakia, Finland, and Lithuania are also mostly dependent on oil from Russia. German Chancellor Olaf Scholz announced on Monday that the country cannot afford to ban the importation of oil from Russia. Europe has deliberately exempted energy supplies from Russia from sanctions, Scholz said on Monday in response to calls from the U.S. and Ukraine about a ban on importation from Russia. At the moment, Europe's supply of energy for heat generation, mobility, power supply, and industry cannot be secured in any other way. It is therefore of essential importance for the provision of public services and the daily lives of our citizens. As expected, Putin is taking full advantage of the EU dependence on Russian oil. We will explain that in the last part of this video. Please let the video share and comment. So, let's ask the big question. How will the ban on Russian oil affect oil prices and the global economy at large? It is quite unfortunate that we are experiencing so much turmoil at the moment. The global economy has yet to recover from the pandemic. Then came the high inflation. Now this with the threat of a world war still hanging precariously in the balance. To answer the question posed earlier, yes, there will be consequences. After Biden's announcement on Tuesday, oil prices jumped to a record high. WTI crude oil increased by 7% to over $128 per barrel. The international benchmark, Brent crude oil, rose by 7.7% to $132.75 per barrel, higher than the 2014 peak and almost as high as the 2008 peak of $147 per barrel. Though oil prices have since slumped to around $119 per barrel, American multinational investment bank J.P. Morgan predicts that oil could hit $185 per barrel by the end of 2022. The financial services holding company states that if the ban on Russian oil exportation lasts till the end of the year, we would see oil prices skyrocketing even above the 2008 figures. Giovanni Stanovo, a commodity analyst at Swiss multinational investment bank UBS, also predicts that a prolonged war would disrupt the supply of commodities and send the international benchmark to over $150 per barrel. Such a high oil price is in itself quite catastrophic, as pump prices will go even higher. However, there will be greater consequences. Firstly, soaring energy costs may cause an inflationary shock, pushing inflation by 6 to 7% in the US and Europe. Already, inflation is at a 30-year peak in the UK and 40-year peak in the United States. It should also be noted that a 10% increase in oil prices in euros causes inflation to increase by up to 0.2 percentage point. So far in 2022, there has been an 80% increase in Brent oil prices in euros. In the United States, inflation increases by up to 0.2% with every $10 rise in the price of 1 barrel of oil. If prices jump to $150 or $185 per barrel, that would have such a significant effect on the prices of goods and further reduce the purchasing power of households. Apart from its oil prowess, Russia is also a big exporter of grains, potash for fertilizers, palladium, nickel, coal, and steel. If Russia is excluded from the international trading system, many sectors and industries will feel a pinch and the price of food will skyrocket. Secondly, the global economy is still reeling from the pandemic. According to the European Central Bank, the war could affect the growth of the euro area by 0.3 to 1 percentage point in 2022. The Apex Bank predicts that the 19 countries in the euro area could face high inflation, low economic growth, and high unemployment, all attributes of stagflation. A similar situation can be expected in the United States, forcing the Federal Reserve to go ahead with interest rate hikes, which would in turn put a lot of pressure on investors and borrowers. Are there any viable substitutes for Russian oil? The demand for fossil fuel will continue to skyrocket as supply falls, which means governments will be on the lookout for alternatives to fossil fuel. Efforts on developing viable and sustainable substitutes will increase, but the world is still a long time away from ditching coal, oil, and natural gas. According to analysts, a likely mid- and short-term solution will be to inflate the prices of oil, natural gas, and similar products. Another near- to mid-term consequence of the war and the sanctions will be a stronger relationship between Beijing and Moscow, firing up rumors of an alliance against the United States. Those are some of the outcomes that can play out in the coming weeks and months if the war and sanctions persist. Be sure to drop other ones in the comment section below. As promised earlier, let's quickly examine how Russia is milking the Europeans' dependence on its oil. Russia Deputy Prime Minister Alexander Novak has threatened that Russia will close a major gas pipeline to Germany if the European country and others toe the same path as the United States. While speaking to reporters, Novak said, "A rejection of Russian oil would lead to catastrophic consequences for the global market," adding that the price of oil could jump to over $300 per barrel. The Deputy Prime Minister said Russia could impose an embargo on gas pumping through the Nord Stream 1 gas pipeline. He declared that it would be difficult to find a quick substitute for Russian oil on the European market. It will take years, and it will still be much more expensive for European consumers. Ultimately, they will be hurt the worst by this outcome, he said. Recall also that Putin declared the previous sanctions as an act of war, adding that imposing a no-fly zone on Ukraine will seal the deal with catastrophic consequences for Europe and the rest of the world. Whichever way you look at things, there will be consequences for borrowers, investors, households, governments, and other entities in the US, Europe, and the rest of the world at large. That's why we implore all our viewers to be more proactive and informed about finance, investment, and market movements. Thanks for watching the video. If you are yet to do so, please smash the like button and drop your comments and observations in the comment section below.